Hello traders, this is Blake Morrow and you're listening to the week ahead video for April 7th, 2019. I'm actually filming this video a day earlier than I normally do just because I have some plans for Sunday morning, so I'm not going to be able to film it as I normally do at that time. So I wanted to get this out to you guys ASAP and get you guys ready for the next week. But before I do that, I wanted to talk about the ForexAnalytix platform. If you have not tried ForexAnalytix, make sure you do so. It's only $1 for 10 days. You just click right here where it says sign up today, click that button, and once you do that, make sure you download the mobile application, so this way you have our app, our private ForexAnalytix chat room, which myself and Amanda and Steve and Polly, we're all in. You can chat with us all day long, but you have that all on your iPhone or your Samsung or whatever device you're using. So download the mobile apps on the Apple Store or the Google Play Store. All right, let's go ahead and talk about this week coming up. Now, frankly, we're kind of in the same boat that we've been in, and the analysis that's on the ForexAnalytix platform is still being done and completed as we speak. So I'm going to be showing you just a couple of charts just separately on TradingView, not on the platform because they all haven't been done just yet. But what I wanted to show you is we're still stuck in the same ranges that we've been in. I can't help but notice something that's pretty important, I think. The euro dollar is still in this range, very tight range, and you guys recall that we had this low right over here below 112 is like 111.70. It was a little false breakdown below this low back in November, and that pushed us up towards the 114 level. We had a false breakout to the upside of this downsloping range. You can see that, or downsloping trend line, excuse me, and that slumped us all the way back down towards 112. Or 111.70 almost. So we have almost what you could consider a double bottom. And I know that it's tempting. It's tempting to be long the euro because it's manageable risk. I mean, as a trader, all we can really ask for is, how well can we manage our risk? We try to trade certain themes in the market, certain macro fundamental themes that you feel very strongly about, but for a trader, what we can do is manage our entries and our stops, right? I mean, because things happen. I mean, when you have central banks that are all relatively at the same rate, then you have some sort of news, and especially with the Trump administration, you can have something that was said that can drastically move the market against your position. So really, all we can do is just target our entry. Where do you want to enter, and like if we wanted to buy the euro here at 112.15, and then put our stop below these lows. And I know it's tempting, like in this case, and because you got a decent risk reward. But something that jumps out to me that is really, before you go off and do that, is really important is I'm going to have to take you over to the equity markets. I want to take you over to the S&P. Now, the stock market's really strong, and frankly, the stock market looks like we can go to all-time highs. I mean, we really could. You put together a China trade deal, and you got a Brexit situation comes to a resolution, and the S&Ps can be at new highs. I don't doubt that. Okay, but something that I do notice is a few different things. You'll notice that the relative strength is divergent for now. All right, doesn't mean that it'll stay this way. The S&P could, obviously, if stocks break higher, all that's going to happen here is the S&P RSI is going to break higher. Like you saw over here. It's divergent for now. We need to observe that. There's something else that's kind of important. You'll see right here is this is the daily sentiment index, and it's something that that we get every day. It's a good way to gauge, how extreme sentiment is. And what you'll see in the S&P, I look at these far left readings because this is the most current. The S&P and the Nasdaq are ranked are at 91. That's 91 out of 100. Whenever you're above 80, things start to get a little, you start to go, wow, that's pretty bullish extreme. Right now, we're at 91 on both the S&P and the Nasdaq, and then you take like the Nikkei's at 93 down here. When sentiment is this blatantly bullish, that's about the time that I start looking at the other direction, meaning it's way too aggressively bullish. Things are probably going to change soon. So meaning that it's bullish right now in stocks, but it's very extreme, which could lead us to, a reversal. Now, does that mean that I think that the S&P is going to completely crater? No, I don't. But does that mean that I think the S&P can pull back 50 handles? Yeah, I do. And the problem that the S&P has, or excuse me, I'm sorry, the problem that the FX market has, especially when you're talking about like the euro, or I'll just take you over to the dollar index, which I'm gonna have to do this way. You look at the dollar index, the dollar tends to benefit when the market sees some risk aversion. That means when stocks come down, the dollar tends to have a better bid. It tends to go up. And in this case, we have what's called a bullish wedge in the dollar index. So when you have a bullish wedge in the dollar index, that means that the probabilities of an upside break in the dollar index are higher than a downside break. So when you have a wedge that looks like this, I would say that there's if I had to throw a number at it, and I'm not a statistician, I always tell people I don't go through 25 years worth of data and based on the last 25 years worth of data outputs that I've I don't do that. And sorry, I don't talk like that either, but I'm and if you do talk like that, I really do apologize. I'm just it's Saturday afternoon, what can I say? Anyway, what I'm trying to say here is that if I had to throw a number at it, I would say, when you have a bullish wedge, 65% of the time you break higher, and then 35% of the time you break lower, or something like that, somewhere in that neighborhood. When you have the S&P that is strong and looks like it could pull back soon, and if the dollar is going to be the beneficiary on a stock market pullback, well, that could lead us to a potential that's not going to come out right, so let me just draw it like this. It could lead us to a potential bull flag pattern. Okay, now a bull flag pattern might lead us to a breakout above 97.70 is what we're looking at, and maybe up towards the 127% extension at 98.26, or maybe even could take us a little higher towards that 161% extension. It's possible. You take this this flag and you take that stick and you put it over here like that. It reaches about there. So when I'm looking at the dollar and I'm looking at the S&P and I'm looking at like daily sentiment index, my thought process is, man, I think the dollar is at risk of going higher. I see a lot of analysts and a lot of traders basically are bearish dollars, and I have to admit the dollar is holding up really well. I mean, we've held the 200-day moving average pretty consistently, and now the dollar looks like it's about ready to break out. Do I think that the dollar is going to 120 or 100 or 101? I think it could over time, especially if the market got a little bit more risk averse. I think that is entirely possible. Meaning, if the stock market turned around and we did one of these, like what happened over here, I think the risk of I think the risk of the dollar index of going significantly higher, maybe up towards 101, 102, 103 and change up here, I think that's possible. And I think people are underestimating what the dollar can do. Now, will the dollar, or will we see a move like that this week? Well, I look ahead. This is called the week ahead video, but I look ahead and I go, well, what events can really push us in that direction where we see this in this case would be like I'm looking at the euro dollar, but let's say what could push the euro below this support, which would play really well into the dollar index breakout, since the euro is over 50% of the genetic makeup of the dollar index. We have an ECB meeting this week. There's not a lot of economic data happening this week. We're all kind of still waiting for Brexit. I know the UK GDP numbers are due out Wednesday morning, but the key event of the week is going to be the ECB on April 10th, so on Wednesday. And we do have other secondary data in the US, like CPI is on Wednesday, and then we have producer prices on Thursday. But really the key event is the ECB. And if there's one person that can send the euro dollar lower, it could be Mario Draghi. So I know a lot of people are buying the euro here because of the managed risk. You can buy the euro where it's at and put your stops below these lows. But I will tell you what, if we break below this 111.70, I would not want to be short the dollar. I would not want to be long the euro. And frankly, given how heavy the euro is trading, and given the fact that the economic data, I know everywhere is really deteriorating, but you look at German economic data, and it's looking pretty dire. And on top of that, you have a new incoming ECB president that could be German. I think the risks are that, and if it is, you have a German ECB president, you're going to have a dovish ECB, plain and simple, until Germany turns around. Frankly, I think the risks are for the euro dollar to break down. And can the euro break? Euro hit 111 or 110? Absolutely. 161% extension of this move here takes us to 110. So I am looking to short the euro this coming week. I am not short the euro. I'm strategically looking to short it. I'm not too sure where, but I'll tell you what, if you listen to the FACE webinars that are free every day, that's hosted by Dale Pinkert or Forex Stop Hunter, if you follow him on Pipsar, or on Pipsar, on Twitter. I'm Pipsar on Twitter. But if you follow Dale, you can get the link every single day. And I'm there for the first half an hour or so. I'll be a little bit more adamant and a little bit more adamant and a little bit more specific about looking for entries once the market opens and I can see, I can watch price action a little bit. But frankly, I am looking for a euro short this week. I'm looking to get myself in. Again, what I'm going to be watching for this week is I'm going to be watching stocks, especially at the very beginning of the week. I'm going to see how the S&P is performing, and if the S&P, maybe Tuesday, maybe Monday, shows like we're getting a little top heavy and it looks like it's going to pull back, that might be my cue to start buying dollars or shorting the euro dollar. But again, guys, we are in a very tight trading range, and these ranges aren't going to last forever. Will this week be the week that we break out? Let's hope so. And I hope volatility really starts to pick up, because I know it's been challenging for a lot of you guys here. And I hope you, so for those of you that watch Real Vision, I hope you saw my debut on Real Vision where I talked about the Aussie New Zealand. And that one's worked out well this week. But we've turned to a lot of these exotic currencies because the major currencies have just been in sideways pattern. This is actually the tightest. I was reading on JP Morgan earlier today that on one of their research pieces that this is the tightest in history, a 6-month range of the euro dollar that we've seen. So, but that's not going to last forever, and we're going to get some volatility soon. And I'm hoping at this point it's a euro dollar breakdown and a dollar breakout, at least, for the next few weeks. We'll see how the market goes from there. But so guys and gals, if you enjoyed this video, I know it's a relatively short one, but if you enjoyed this video, make sure you hit a thumbs up on the on YouTube if you're watching it there, and make sure you subscribe so you don't miss to our channel, so you don't miss any of our great interviews that Dale Pinkert does on the Face webinars. He brings so many people that you see on Bloomberg and CNBC, and you might only see him for a few minutes at a time. He brings them on for 30 minutes and really dives in deep into topics with these folks, and they're free. And you can listen to them anytime if you subscribe to the YouTube channel and you miss them, and you can go back and listen to it. So yeah, give us a thumbs up. We'd really appreciate it. And try out ForexAnalytix if you haven't already. And I look forward to having you part of our community. But guys and gals, my name is Blake Morrow. I'm with ForexAnalytix, and you guys have a great remainder of your weekend, and I'll see you next week.